Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 26 of the Forex market review. Today we're going to look at two pairs, one which was successful and another one which wasn't, and a couple upcoming pairs as well. Without any ado, let's jump straight to those charts. So the first pair we're going to look at is the AUDUSD. Now this wasn't a successful trade for myself, and that was because of the poor USD durable goods numbers which came out. And because of those numbers, the Aussie dollar rallied and I was looking for a shorting position. So as you can see on this daily time frame, I was looking for a push back up into this daily DSR zone, which I had. I then looked for the push back lower, dropped down to my 4-hour chart as I normally do, looking for my AO divergence on the 4-hour chart. And here I have my AO divergence with the price going higher as the AO steps down lower. Now it definitely was clear. If I zoom in here and come down and hover around down this level here, if I can just get it past the stochastic indicator, you'll probably see it pop up and it will alert you that it was just below the zero line. So it's not going to show me that clearly, but just came just below the zero line, and that's what we need for our clear divergence. So higher in price with the AO coming just below the zero line before going back up. We then drop down to our 1-hour chart and we look for our divergence on the 1-hour, which we didn't have, but it doesn't matter because we had it on the 4-hour. Then look for our wave 3 pattern. So here we've got either you can say 1 up for 2, down for 3, or you could look at this one as 1 up for 2, down for 3. So as we've discussed, we look for the first large AO, which was seen here on the downside. We go to the start of that, which is generally the beginning of wave 3. And when it's come back to the zero line, which it did here, that's when we can start considering this one being end of wave 3 here with a pullback for wave 4. Came all the way up to our minimum 38.2 retracement. So it actually came to 50%. And then started to step down. I looked at a selling opportunity at these levels down here. Now it never broke below and stayed below the 100 EMA line, which I like to see, the 1 hour 200 EMA line. Unfortunately it did continue higher, but I still took a position. Had my stop losses up here of around 40 pips, and as you can see it stepped back up and stopped me out. So I was doing well until those USD durable goods numbers came out, and because they were worse than expected, you can see this big rally up here with a bit of consolidation and then another push back higher. So I was just saved here by a couple pips, but then I got stopped out as it continued through the Asian session. Probably should have waited for that confirmation below the 200 EMA line, and that would have saved me. But you know, lessons learnt. The next trade I was looking at was the Euro Yen. I wanted to see it come back into this DSR support area, which it did. Drop down to the 4-hour chart. Again, looking for our divergence, this time a lower low in price with our higher AO. So easy way to remember it, if you're going long, it's got to be stepping down with the AO stepping up in the opposite direction. And if you want to sell the market, you're going to be looking for the price to step up with the AO stepping down on the top side. And that just shows it's getting weaker in that direction. Zooming in on this one here, you can see if I hover just above it, it says 0.009 is popping up. So it just goes to show that it did just make confirmation drop down to the 1 hour chart, looking for my wave 3. So here's the first large AO on the upside. So we grab our tool from the start to the finish. When it's crossed back below that line, we know we can then look left for that highest point. In this case, we can't see waves 1 and 2, but we can just say all of this move is 3. It's come back to the minimum 38.2, then crossed up, stayed above this 200 EMA line on the 1 hour chart. So entry was around about here. Stop losses somewhere down here. Being very conservative, you probably had about an 80 pip stop losses. Being aggressive, you had about a 40-50 pip stop loss. It then stepped all the way up and came up to these levels up here. If you had the type stop losses around 40-50 pips, you definitely made your 1 for 2. For myself, I'm a bit more conservative. So up here was my 1 to 1.5 level. Because it hit this DSR zone here, if I just scroll back just a little bit, as what you can see, so because it just hit that zone up there, I decided to tighten my stop losses, which I did, and I exited the market down at these levels here. Unfortunately for me, Draghi from ECB Europe, Draghi came out. He advised that the stimulus package is working well. They're going to need a bit more time for it to fruition, but it's doing very well, and they're going to allow it to continue and slowly degrade the stimulus in due course. And because of that announcement that the economy is doing very well, it's starting to pick up, and they're going to look at slowing it down the track. That just goes to show that they're not going to print more money, and that therefore was a positive sign, and then instead of being negative, which stimulus or printing money is. And as a result, it just skyrocketed. So if I had stayed in the market, I definitely would have hit my 1 for 2 at the top of this DSR zone. And if you were still in the trade, you made a lot of money. Just go to show it's hit all the Fibonacci levels, and I definitely would be getting out by now. It's all the way up to the 161.8. So if you haven't exited the market, definitely get out of those levels there, and man, you should have made 4, 5, 6 times your money, and that's a very successful trade if you stayed into the market. Zooming out where the next DSR zones, as you can see, if you look left, there was one there, and there's currently one it's sitting on about this level here. Coming up in the market, we have 4 pairs. So here we have the Euro Pound. So at the moment, we're looking to test this resistance area, DSR zone, looking for our divergence, which we have, stepping up higher in price as the AO is stepping down and giving us clear divergence. It hasn't broken the highs just yet, so it's still a selling position. If it does break a high, we can just reverse or move this across, and as long as the AO remains lower as it still steps up, we can still look at this position. We haven't entered this position yet because it hasn't fallen enough for our confirmation. So hopefully it does pull down. Then we look at our retracement. So if you give us a nice large AO to the downside, as long as it's come back to its minimum 38.2, maybe retesting this 200 EMA support area, closes back below it, and then we'll look at it trading it down to this DSR zone there. So if it does pull back to those levels, you could probably be looking around 50-60 pips and 130-40. So definitely make your 1 for 2 to that area there. If you can't make your 1 for 2 to the next DSR zone, then you just need to look for that better entry condition to allow you to be able to get it down to those levels there. Pound USD, we're starting to see it push up, came back into this DSR zone here. 4-hour chart, want to see our minimum divergence, lower low in price, higher AO. So we had that. 1-hour chart, You can see it stepped up, it's starting to do a nice large AO here. So we're going to try to look for a pullback in this market and then find some support areas and then looking at a push back up higher. Depending on when this occurs, I may not take the trade. I'm not taking any more trades for the rest of this week until after the financial year. Until the next financial year. We've had a great win rate so far, so we want to hold on to that. New Zealand USD is another pair we're looking at, this time selling. Here's the resistance zone, DSR zone. Drop out down, so you can see this nice candle here. I'll zoom in a bit. It's rallied right up on that positive durable goods numbers and then got slammed all the way back down. So that's to me saying it's ready to go a lot lower. We need to see our AO divergence, which we do, higher high in price with our lower AO. Now obviously this is all one big AO here, so we can even look at those levels in there. It's still stepping up as the AO is stepping down. Next thing we're looking for is a large AO to the downside. So here it's starting to form, but it hasn't fallen enough. So you can see it's fallen, but this AO just doesn't look big enough. You know, that's a nice large AO there, or that one there. So it quite possibly could be one coming back for two. People say to me, why, if you think it's coming back for two, why didn't you just take that trade long? Because my testing proves taking the third wave, after the third wave, is my best opportunity. So I'm expecting to find some support in this DSR zone, rally back up. It can come anywhere except break these highs. But it's got to come back to a minimum of, we'd like to see at least 50%. So if it can come back to those levels, then we see it push back lower, come up, give us a nice large AO. Then we would use our retracement tool on that large movement, look for pullback to the minimum 38.2. And if it comes up to those levels there, then looking at for the next move lower and taking that one. Where do we think it's going to go? Well, if I zoom out a little bit, down to this level down here is the next daily DSR zone. And we've got one support area around here as well. So we just want to pencil those in so you roughly know where it's going to go. And so therefore, when we see it push through that support zone, it's probably going to come back and become a resistance area where we're going to look at getting short and putting our stop losses about 50 pips or so, and then driving it all the way down to there, and we should be able to make 150. So a good 1 to 3 risk to reward. So if you're risking $100, you could make $300, and that would definitely be a great target to go for, but bringing it to break even towards those lows again. So again, this is just a guess of where the market will go. We'll have to wait to see exactly where it does go. The last trade is the WS30, or the US Stock Exchange Top 30. We have a divergence on the daily, which is great to see. And we have it on the 4-hour chart, stepping up and stepping down. So now we're starting to see that move down lower. We jump to the 1-hour chart. We're starting to see this nice large AO here. So we could look at this as wave 1, up for 2, coming down for 3. So we want to see how far that can go. But in the meantime, we'll just draw it in and wait for a pullback and then take our positions short. Thank you for that. That was week 26 of the Forex Market Review. Please follow our Twitter feeds, and you'll get the daily updates as soon as I send them out. We wish you all the best in your success. Take care. Bye-bye.